housing affordability improved in 2025. Today, we're going to look at the factors that contributed to that and look ahead to home prices in 2026.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey, what's up, guys? It's Sam Hartman, keeping it real estate here in Fort Wayne, Indiana. And I am here to bring you the context and clarity that you need to be confident consumers in the world of real estate. And I've got some great news for any prospective home buyers out there. Housing affordability is improving, and we actually saw it improve in 2025. And so we're going to look at the factors that contributed to that and what you might expect in 2026 home prices, and if now might be the right time for you to consider home ownership. So housing affordability is made up of three key components. There's the home prices, pretty obviously. There's the actual wages that people earn, and then there's the interest rate. And so let's talk about these three components, how they've affected housing affordability in 2025. First is prices. Now, depending on what your algorithm is feeding you, I'm in real estate, so I see a ton of real estate content, and I see a ton of what I like to call doomers out there talking about real estate market crashes. And I've done videos in the past disputing those. I put data to the market to give context and clarity to those things to show there's really no systemic backdrop for any substantial housing crash in our current market. But here's the good news about housing prices in 2025 is that their appreciation slowed down dramatically. And depending on which index you follow or see, home prices in 2025 appreciated anywhere from 1% to about 1.8%. Now, this is a far drop from the 20+% appreciation we were seeing in the post-pandemic housing boom. So that slower rate of appreciation is helpful in achieving more affordability because number two is wages. And wages in 2025 actually grew 4.1%. So as wage growth is outpacing the growth of appreciation in the housing market, that makes affordability stronger for buyers in the market. That gives buyers more leverage, more financial stability in the housing market to potentially dive on in. And now the third key indicator, the third key effect in housing affordability is interest rates. And in 2025, we didn't see any drastic drops in interest rates, but we saw much better interest rate stability. Whereas in 2024, rates were jumping up and down and changing very frequently. We saw a good 5-6 month stretch of interest rates being below 6.5%. And just this last week from recording this video, interest rates dropped below 6% for the first time in over 3 years. So I'm sure there were people ready, able, and willing that jumped on that one-day rate of 5.99%. But the good news for many of you is that the stability of the interest rates is looking strong. They're still in the low 6% range. And maybe we'll even get some good indicators of lower movement going forward. And again, that's going to help affordability going into 2026 as well. So what are we expecting in 2026? How might affordability continue to improve or change going forward in 2026 as well? And so again, let's look at some projections. Let's look at what the housing market, what the experts in the housing market are saying to expect from price appreciation. Now, I have a list of 24 different housing forecasts from 24 different entities. And for what it's worth, it's a wide range. I mean, on the high end of 4.5% appreciation to the low end of actually 1% of depreciation. Only 3 out of these 24 are actually anticipating or projecting any depreciation coming in 2026. Now, this is a great time to point out how hyper-local real estate is. So much depends on the market that you are in, because there are markets in 2025 that were losing values. A lot of the Sun Belt states, a lot of parts of Florida, parts of Texas, parts of Arizona had a lot of struggles and a lot of appreciation in 2025, but the market as a whole was on the positive side of 1.8%. Now, Fort Wayne, Indiana, in 2025 appreciated 2%. So just above that national average. It's what I love about Fort Wayne, Indiana's market, because our highs are not as high, our lows are not as low. This is a great time to remind everyone. During the great financial crisis of 2008, the housing crash of what everyone looks back to and says, that's what I needed to be able to buy a house. I want the housing market to crash again. Well, in Fort Wayne, Indiana, over a 5-year period, our total depreciation was only 5%. So even one of the greatest financial crises, the greatest housing crashes in our nation, didn't nearly affect Fort Wayne, Indiana's market as much as the market as a whole. So that is good news. That is confidence that you can have about the conservative nature of Fort Wayne's real estate market. Buy with confidence, know that there's stability there. So in 2025, we had 2% appreciation. But going forward, these are national projections, anywhere from 4.5% appreciation to 1% depreciation. Now, if we take an average of all 24 of these, I think that gives us a lot more realistic picture and view. You've got the bulls on the high side, you got the bears on the low side. But if we take an average of all of these 24, that puts the price appreciation expectation for 2026 at 1.43%. So again, this is going to be a number that's going to be below wage growth. It's going to be below inflation. And so these are positive things that are going to, again, continue to improve housing affordability for buyers in 2026. Now, the wild card here, the thing that could change that a lot, are those interest rates. What's going to happen there? Projections, again, are conservative that there's not going to be drastic change from where we are today in the low 6% range. That can all change drastically for a couple of reasons. One, if inflation spikes again, that could put upward pressure on interest rates. If the housing market is getting much weaker, that could put, if the job market is getting much weaker and the economy is getting weaker, that could put downward pressure on interest rates. So these are the things that the Federal Reserve is balancing with their interest rate policy and how the changes that they're making there. And so these are things that we're going to monitor and continue to keep an eye on going into 2026 to see how those changes might affect interest rates and how it might affect affordability. So the good news going forward, prices are expected to appreciate. I expect Fort Wayne to be on the upper side again of that projection. I would expect us on the low end to be in that 2% range, but with the buyer demand I'm already seeing in early January here, I think we could very much be higher than that. So again, I think Fort Wayne's response will be conservative, but this is good. You can take advantage of appreciation, but also it's slowing. So you're not trying to keep up with a market that feels unattainable. You can plan, you can budget, you can base your education and your preparedness to make the right decision in housing when the time is right for you. So again, I always say this, it's important to repeat. There's no right time to buy. There's no right time to sell. It only matters when it's right for you. But I don't want uncertainty or fear of the market to keep you from getting educated and prepared to make housing an option for you if it's a goal you want to achieve in life. So reach out. Let's start the process early. That's what I'm here for. I want to connect with home buyers and sellers in the Fort Wayne, Indiana market so I can advise you, so I can prepare you, so we can create this clarity so that you can be confident consumers in the real estate world and make great decisions. So thanks for sticking with me. Let me know what you want to hear next in the real estate market. Keep it real estate out there, guys.